Hello, Raju. Am I audible?
Yes, Amrish is audible.
Okay, fine. So you're here to the ACCA demo, right? So
Yes.
have you completed any particular paper of ACCA, or you're starting to
No, this is the first
like
time.
the first time? So I take it you have completed a 12th standard
Yes, sir.
or graduation.
Yes, sir. I
Okay,
pursued
fine.
MBA Finance.
Pardon?
I pursued MBA Finance. My qualification is MBA.
Okay, you have completed MBA.
Yes, correct.
Okay, fine. Okay, just a second. I'll share my screen with you.
Okay.
Okay, can you see my screen?
Able to.
Yeah.
Oh, yes, able to see.
Yeah. Okay. First of all, I want to know what language you're comfortable in Hindi, English, or any.
I'm okay with English or Telugu, sir.
Acha, English only. Okay, fine. See, today we are going to start with a particular chapter that is known as a consolidation. Have you heard about this term consolidation earlier?
Yes, sir.
So
Consolidation.
what?
Yes, sir.
Okay, so what is this consolidation according to you?
Sir, actually, it's comparing the two or more than reports to find that exact discrepancy.
Discrepancy. No, it's not like that. Okay, I'll just tell you one
Okay.
thing. See, first of all, we are going to the meaning of consolidation is like we consolidate, we combine, or we can say, I can say that we join the financial statement of two entities. That is known as what? That is known as specifically consolidation. Okay, how
Okay.
this consolidation terms arrive? Huh? Tell me.
No, no, no. You're
Yeah.
continue.
Okay.
I'm not
Yeah.
saying anything.
So now what do you mean by this consolidation? Okay. So how this consolidation arrive? Like for example, in what scenario, what we are going when we are going to consolidate two financial statement of a two entities, two or more entities. See, consolidation normally depends upon the type of investment we have in an entity. I'm going to repeat myself. The consolidation depends upon the type of investment we have in a particular entity. Like for example, in this we have normally three type of investment. Like for example, A company and there is a B company. Now A company is buying investment in B company. So it might happen A must buy an equity within a range of 1% to 19%. ठीक है. Second thing, it might happen कि he can buy an equity. I'm talking buying means I'm talking about an equity. Second, yeah, A can buy an equity in B within the range of between 20 to 50%. Okay. And the third, he can buy an equity in that B between 51 to 100%. And this between I'm talking about it inclusive of this 20 and 50, 51 and 100. Okay. Okay. So like for example, if I am
Amrish.
buying yes.
No. So actually, one of my friend also, she's interested. I mean, interested in ACCA course. Okay.
Okay.
She
Okay.
also going to join. Okay.
Yeah, yes, tell me. No issue.
Okay. Okay. I just share your Gmail link to her. She will going to join. Thank you.
Okay, so should I wait for her or should I continue?
No, no, no. You can continue. I think she will join within 2 to 3 minutes.
Yeah, because this is basic. She won't be able to understand. That's why.
Chalo.
Okay, so just we can wait for it for 2 minutes. Okay, then we can start. Okay.
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 Okay. Okay. Amrish, she has joined. You can continue.
Yes. Okay. See, like I'm going to repeat myself again. See, in we normally do we are here talking about a consolidation. Okay, so consolidation normally means combination, or we can say combining two or more financial statement for two or more entities. Okay. Okay, so consolidation normally depends upon the amount of investment we have in entity. Like for example, there is an A company who is looking forward to buy an equity in B company. Okay. So consolidation normally depends upon the type of investment we have in entity. Like for example, there are three type of investment which is normally defined. First is 1 to 19%, second is 20 to 50%, and third is 51 to 100%. Okay. Now this 1 to 19% means what I'm talking about an equity. Like for example, A entity is buying equity in B entity, and he is buying around 15% equity. Okay. So the amount of investment we do in entity, okay, is going to help us to identify what type of accounting treatment we are going to give. Okay. So for example, if A entity is buying equity in B entity and the amount of investment is normally 15%, then it has to be governed by a normal accounting standard. Like, okay, so there are three type of category, and this in these three category, the treatment of various accounting standards is going to vary. Like for example, here, if my A is buying normally 15% entity equity in B entity, okay, then it has accounting treatment should be given by IFRS 7, IFRS 9, and IAS 32. If A entity is buying equity, like for example 30% in B entity, then normally it is normally called as what, it has to be governed by one accounting standard that is known as IAS 20. This category 1 से लेके 19% तक, this is normally considered as a normal investment. So it's not like that you have to prepare a separate financial statement in order to do this. It's like it is considered normal investment, and in balance sheet no separate accounting treatment is required. In you can write your investment, and you can write the value of the investment which you have made. Okay. When I'm talking about 20 to investment ranging from 20 to 50%, that means that entity becomes my associate. Like for example, if A is buying equity in B entity for 30%, that means B becomes the associate of A. A is buying 30% equity in B entity. That means B becomes the associate entity of A. And in such a case, that accounting treatment has to be given by international accounting standard that is known as 28. Okay, accounting for associate. In that case, when we are going to prepare balance sheet now, we are going to show a separate head for that. Okay, that is investment in associates, and we are going to prepare a separate account for that. And that investment in associate, what we have paid dividend, what is there is increase or decrease in amount of investment, we have to record that, and we have to transfer the entire amount here. Okay, so there is a separate accounting treatment for that. If investment is between 1 to 19%, there is no separate investment accounting treatment is required. You can club that amount with your other investment. If the investment category is between 20 to 50, and this 20 to 50 including I'm talking about, like for example, even though A is buying exact 20% in B entity, even though that is that classify as an associate, even though it is exact 50, that is going to classify as an associate. So this 20 to 50 is inclusive, huh? Third comes to what? Third comes to between 51% to 100%. Okay. So like for example, when I'm buying a controlling stake, when controlling stake arrives, if I am buying more than 50% in a particular entity, okay, so in such a case, then that particular entity becomes what? Subsidiary company. Now I'm going to explain you the relationship, what is subsidiary association, that in normal pictorial form. Don't worry. And this accounting treatment with respect to this is has to be done by IFRS 10, consolidation of financial statement. Okay. In this case, now what we have to do, we have to take the financial statement of both the entity, like for example, A entity and B entity, and we are going to merge the financial statement of A and B, and we are going to prepare a single financial statement combined. Okay. Thirdly, If for example I'm talking about A is buying in investment, like for example I'm talking about 60% in B. Okay, then normally we are going to make consolidation in the books of A, because what here A becomes the parent company. Now what do you mean by this parent and subsidiary relationship? I'll tell you. See, if a particular entity is buying a controlling stake, now what do you mean by controlling stake? Controlling stake means we are buying an equity in a particular entity ranging from 51% to 100%. So if A is buying, like for example, 80% or exactly 100% in B, then A became the parent company. It is also called as holding company. Then here B becomes the subsidiary company. Okay? It might happen. See, consolidation, that doesn't mean that you can have only one subsidiary company. It might happen, like for example, there is an A entity, and I'm going to take here four. Like for example, here is B entity, here is C, here is D, and here is E. A has bought 80% in B. So A is a parent company. B becomes subsidiary company. A has bought 70% equity. It is subsidiary company. A has bought 30% in equity in D. It become associate. This is subsidiary company. A has bought normally 100% of E. Then E become what? Subsidiary. Okay. So I'm why I'm telling you this, because it's not like that you can have only one subsidiary entity or you can have only one entity as an associate. You can have your multiple associates. There is also, I can add one to this, like for example F, and A has bought, I can say, 20% entity equity. Then what? F is an associate of A entity. So you can have multiple associates and multiple associates and multiple subsidiary at the one time. Okay. In your syllabus, like for example, talking about in ACCA, we have two types of things, like at the skill level and at one professional level. In skill level, you have only one thing only. A parent company can have only one subsidiary company, and apart from that, he can have only one associate. So at skill level, you cannot have multiple associates or you cannot have a multiple subsidiary company. Okay? But at the P level, like for example, I'm talking about professional level. In professional level, you can have your multiple subsidiary company or multiple associates. Okay? But before reaching at the P level, you have to go through this skill level. And skill level is like it is just the foundation of the all this consolidation associate. Okay? And P level is just an extended version which you have already studied at the skill level. Okay? Because that is just a macro level, and the amount and the number of subsidies is going to get double or twice or thrice. That's it. But the base which you're going to study are going to study at the skill level itself. Okay? So this was mainly the background, like what is a consolidation. So like for example, how you're going to treat the accounting treatment for this. When at the end of the financial year, like for example I'm talking about as on 31st March 2026, when A is going to prepare financial statement, A is itself is an entity. Okay? He is having his own set of business operation, and this is his what? This is the amount of investment which he has made in other type of business entities. So when at the end of the financial year, when A is going to prepare his financial statement, okay, what he's going to do, he is going to take his own financial statement, trading, profit and loss account, balance sheet, and he's going to combine this with all the subsidiaries, and he's going to prepare one set of financial statement. Consolidation is not applicable in the case of associate. Okay? And what do you mean by the consolidation? Like for example, see, if see I am buying 80% stake in B, so I'm going to take the all in assets and liabilities of A and then combine with the all in assets and liabilities of B. Same is going to do with E and same is I'm going to do with C. Okay? But in the case of D and F, I wouldn't be doing that. What I'm going to do is this. Okay. In such a case, what is going to be my accounting treatment? I'm going to just take the amount of investment which I have made, and I'm going to write the amount of investment in my combined balance sheet as an investment in associate. So there are going to be two types of associate. Okay, two types of investment in associate. Investment in associate one in D, investment in associate two in F. Okay, so you have to show differently in your balance sheet. Okay, till now is it clear? Are you getting it?
Okay.
Okay. Do you have any doubt in this? You understood all?
Yes, Amrish.
Yeah, okay. So in IFRS now, how we are going to deal with this? Okay, what type of question we are going to ask? In skill level, you are going to focus here. Mainly 80% of the time, question is going to come on this subsidiary and subsidiary company and parent company. But normally, if they want to what, like for example, they have to make the exam tougher, they have to include the more analytical path. In such a case, what they are going to do, they are going to incorporate associate as well. So you're going to have parent company, you're going to have subsidiary company, you're going to have associate as well. So you're going to have three things. Okay, three finance. You're going to have three entities, but you have to make consolidation for parent and subsidiary only, and you have to include the amount of investment as an amount in investment in associate. Okay, okay. Now focus here. Okay. What a basic principle. Single entity concept. P limited and S limited are separate legal entities. Now, what do you mean by this? P means what? Parent company. S means what? Subsidiary company. Okay. So, see, since A company is buying equity in B company, like for example, he have bought 80% stake. Like for example, it is an Adani Power, and this is what we can say ACC Cement. Adani has acquired ACC Cement and Ambuja Cement. So Adani is a separate entity, and ACC is a separate entity. Okay, they have own their set of operations. Okay, and they are separate legal entities. P Group Limited. Now, what do you mean this P Group Limited? Adani Group Limited, when he is going to prepare his financial statement at the end of the financial year, what he's going to do is going to combine all the financial statement. Like for example, we are talking about Reliance Group. So what Reliance Group have there in financial statement? They have Reliance Jewels, they have Reliance Petrochemicals, they have Trends, they have Agio, they have multiple businesses. Okay. So when they are going to prepare their financial statement at the end of the year, they are going to combine all the financial statement at the end of the year and going to prepare one CFS. Okay, and show the entire amount at once. Okay, see, one single entity. When I'm talking about a group, so Reliance is considered as what? One single entity. And I'm going to prepare consolidation in the books of Reliance, that is in the books of Adani Group. Okay, and prepare accounts using a substance. Okay, now what do you mean by this control and ownership? See, control means what? Power to direct the activities. When I have a power to direct the activities, na, when I'm going to do that, I have 100% equity in parent and 100% equity in subsidiary company. That means I'm talking about control. See, consolidation happen. When consolidation happen, when I'm going to tell that I'm going to get consolidation of two or more entities, when I'm going to say I have a control for that particular entity. What do you mean by control? Control means was I have a power to direct the activities of entity. Like for example, in this, say if A has an 80% equity in B, that means A has control over B. And now what do you mean by this? A has control over B. It means A can direct the type of activity which is going to undertaken in B. Like for example, what is the type of resources which are going B is going to buy? Like operation decisions, financial decision, all the decision with respect to all the activities. Okay, of B is now is going to taken by A. That is known as control. And if control arises, then in such a case, what is going to say? There's going to be a consolidation. And when consolidation happens, in such a case, you're going to add 100% of assets and liabilities of parent company with 100% assets and liabilities of subsidiary company. Okay. This is known as what? NCI ownership. Now, what do you mean by this NCI? NCI is called normally a minority interest or non-controlling interest. See, what I all told you earlier, A bought 80% stake in B, right? So obviously, since you are owing 80%, see, like for example, B is having 100% equity. Out of this, 80% is owned by A, but remaining 20% has to be owned by another person as well, other entities. That is known as what? Minority interest. This minority interest are other name also called as non-controlling interest. Okay. So you have to make accounting for this non-controlling interest as well. since you're combining the financial statement of both, okay, you have to look after for this NCI as well. Okay, the question might pop out in your mind, okay, since I'm buying 80% stake in B Limited, so do I have to consider this like I have to add only 80% of assets and liabilities of B? Like for example, A is having $100,000 an asset, B is having, we can say, $50,000 an asset, and A has bought 80% of, we can say, B. So am I going to do like this, like I'm going to add only 40% of assets to A? No, you're not. When consolidation happens now, even though I'm having only 51% stake in that particular entity, consolidation happens. And when consolidation happens, now what IFRS 10 normally says, IFRS 10 normally says that in case of consolidation, now you're going to add the 100% assets and liabilities of both the entities, irrespective of the amount of equity you hold by you. So it doesn't matter. You must hold more than 50%. That is 51% between 100. Okay. So even though you're owning 60%, 65, irrespective of anything, okay, unless and until you have like NCI, you have to add entire 100%. So even though you're having only 52% or 55% ownership in a subsidiary entity, or 53%, then in that case also you're going to add the 100% assets of A with 100% assets of B, and you're going to prepare CFS. And the difference with respect to that, like for example, you have 51%, 49% is normally held by other entities. You're going to adjust this 49% with what? Other people. That is known as NCI, non-controlling interest. You're going to add that amount here. Okay. Till now, is it clear?
Yes, Samir.
Okay, fine. What is a parent? A parent is an entity that has one or more subsidiaries. Okay, so I already told you, it's not like that ki a parent, a company can own only one entity. He can have multiple subsidiaries. Unlike we did that, he has B, he has C, he has D. Okay, what do you mean by subsidiary? A subsidiary is an entity which is controlled by another entity, just like what A and B. A own 80% in B, so A is a parent company, and B is a subsidiary company of A. Okay, and B is controlled by whom? B is controlled by A. Okay, which is controlled by another entity that is known as parent company. The key concept in determining whether or not an investment constitutes a subsidiary is that of a control. See, now focus this. Huh? What they are saying, whatever IFRS say, in order to do consolidation of two entities, you need to have a control. In order to do consolidation of two entities, like I'm talking about A and B, one particular entity must have a control of another entity. Like for example, A must have a control of B. Okay? So when control comes, when I have a power to direct the activities of A and B. Okay? When this power to direct the activities is going to come, when I have what? When I have equity holding of more than 50%. So technically, what they are saying, if I am having greater than 50% equity, I have control. And when I have control, that means I have power to direct the activities. Power to direct the activities. So you direct the activities now is connected with what? This equity. But same is not the case every time. It's not like that ki only when you're going to have only more than 50% equity in a particular only, that in that case only you're going to have control. It's not like that. Okay? Generally, in 99% scenario, it happens. See, obviously, if I need to have a control for a particular entity, I must have what? I must have greater than 50% equity. But same is not the case every time. It might happen. So I'm going to change the scenario. Like for example, A entity and there is B entity. B managing director or shareholders are not their profession. They are not that much profession. Then what B told? B came to A. See, please take all the financial operating decision with respect to my entity by you. Okay. So B came to A and he asked the entity itself to take all the decision with respect to all financial or operating decision making with respect to my company. Now A is not having any type of equity. Like for example, it might happen currently A is having only 1% equity, but B is itself giving his control to A. So control arise irrespective of the equity holding. Since I have control, that means what? I have this power to direct the activities. Even in that scenario as well, you're going to prepare CFS. We normally consider that if I have more than 50% equity, then only control is going to happen. Okay? In this scenario, control is not connected with your equity holding. Okay? Main thing is what? Control. So it might happen by any way. Whether B is giving itself, it might happen ki even though A is having nothing in B itself is giving power to control the activities to A. Even in that case, control happens and CF is going to prepare. Okay? See, the key concept in determining whether or not an investment constitutes subsidy is that of a control. See, so holding subsidy relationship normally arise when there is a control. What do you mean by control? Control is power to govern the financial and operating policies of an entity. Financial means what? Like, for example, A is taking the financial decision with respect to B, from where B is going to take loan, with how much amount of dividend B is going to pay interest. Okay, pay dividend at what percentage, at what rate of interest B is going to take loan or issue debentures. Operating policy decision making. What do you mean by that? At what amount of pace company is going to produce its products. Okay, what is going to be the selling price, what is the amount of production they're going to make. Okay, what are the geographical areas we are going to cover, is there any type of production, is there any kind of product we need to launch in this particular year. Any type of operating decision is going to take by your parent company. This is known as financial and operating decision making. Okay, so as to obtain benefit from the activities. Okay, why? Because see, we are going to have a synergy of gain, na? I am going to direct the activities of that particular entity in such a way that with his activities, whatever the amount is going to sell, whatever the product is going to sell, even I should have a share in that. Even I should get benefit from that. Okay? So this is the reason. Like for example, I give you example of Adani and Ambuja Cement. Do you have any idea why Adani has acquired ACC Cement and Ambuja Cement? What is the reason behind it? Just a second. Huh? Do you have any idea? See, currently government is see. Just a second. What happened? Hmm. See, government is preparing what? They are preparing multiple airports. Okay, so they have launched almost 25 to 30 airports in India. And airports are very huge investment. Lot of concrete and a lot of things is normally required to construct that airport. So what Adani thought, na? So cement which is going to be required by obviously by government as well to prepare infrastructure, and there is a ample of tons and tons of cement is going to require. So who are the giant players who are going to provide this cement to government? Obviously ACC and what? Ambuja Cement. So what Adani thought, I'm going to buy this entity and I'm going to provide this cement to what? Government. So indirectly, with activities of ACC and Ambuja, Adani is getting benefited. Okay. So control is what and why I'm saying, see, we need to have control in order to be parent and subsidiary relationship holding. When control arrives, control is usually achieved by the purchase of more than 50% of equity share capital. Okay? So 50% equity share capital. So now this example stand now. 50%, then control, then direct the activities. But same is not the case every time. So IFRS 10, consolidate financial statement, defines control and tells us how to consolidate. Okay? देखो, a parent subsidiary relationship can exist. A parent subsidiary can relationship can exist even though parent own less than 50%. So earlier we were saying what? We need to have control. When we are going to have control? When we have more than 50% of equity in a particular entity. Okay? So earlier we are what? We are joining control, or we are connecting control with the more than 50% equity. But same is not the case every time. Okay? So even though you have less than voting power, less than 50% equity in an entity, the subsidiary, since the key to relationship is control, the objective is control. It's not like that key every time you need to have more than 50% equity. ठीक है, generally it has happened in 99% case, it happen if you have more than 50% control arrives, but it is not the case every time. ठीक है, because main concern is what, power to direct the activity. So even though that particular entity is telling me, or there are other reason who where I can take the control of that particular entity without having a amount of equity of more than 50%, I have control. If that control arrives, then in that case what will happen? Obviously I'm going to prepare CFS. Other situation where control exists are when the investor. So these are the scenarios. Even though I don't have more than 50% equity in entity, even though I don't have more than 50% equity, I still have control. And though I have control, I'm going to prepare my CFS. Okay. Okay. Till now, is it clear?
Yes, yes, sir.
Okay.
Okay. Yeah. Do you have any questions?
No, sir.
Okay, fine. Good. Okay. When can I have when the investor can exercise the majority of the voting rights in an investee? Okay. So I have a majority of voting power in a particular entity. Is in a contractual agreement with other giving control. B itself came to A. Please control my entity. Okay. So in that case, we don't require any type of equity holding, even though you don't have any holding. But we have a control now. Their contractual relationship, control exists, prepare CFS. Okay. Hold less than 50% of the voting power. Like for example, even though I am holding 32%, but the remainder are widely distributed. Like for example, this is 32% and remaining 68% is there are widely distributed. That means even though you're combining, they don't have any saying with respect to a particular decision making. So I have a 32% and majority stake is by me. Okay? And these are widely distributed. You cannot combine all together that 68% and go against yourself because they are not together and arriving at that particular decision. Okay? Remainder are widely distributed. Whole potential voting power which will give control. Okay? So what is the next scenario? See, what is this potential voting power? See, suppose A is having only 10% equity in B. Okay? And B's remaining 90% is distributed widely. Okay? They are widely distributed. And what has happened now? This remaining 90%, out of this 90%, 70% shareholders has given their voting power to A. Okay? So whatever A decision is going to take, that decision is going to have of R as well. Okay? So what is A decision? Same is decision we are going to take. All potential voting power which give the control. Okay? This normally happens. What difference? What other are saying? जो A का रहेगा वही हमारा रहेगा. ठीक? So this normally happens. See, this is the what subsidiary. A subsidiary is an entity which is controlled by another entity, that is parent company. The entity has control over an entity when it has the power to direct the activity, which is assumed to be what? When the entity, see, assumed. It's not like that it must have. When we have control, okay, when it is assumed we have more than 50% voting power. But it's not like that it is mandated. That is the only case you're going to have greater than 50%. Okay? The parent company must prepare CFS, consolidated financial statement, if it has control over one or more subsidiaries. So if you have one subsidiaries or more than one subsidiary, you need to prepare a consolidated financial statement. Okay. The underlying principle of consolidation is what? Substance over legal form. Now, what do you mean by this substance over legal form? Substance means substance over legal form means what? Focus on what has actually happened rather than what has happened, what is happening, or what has not happened in a legal form. Like for example, I'll tell you, there was A, okay, and A has bought a flat in B's building, or we can say A has bought flat from B. Okay, the price was around, we can say, $100,000. Okay, now what has actually happened now? A has given money to B. The money has been credited in B's financial in his B's bank account. Okay, A has taken the possession of the property. A has started living in that particular house. The only problem is that on legal form only, we can say on stamp paper or okay, on stamp paper actually, or we can say on invoice, there is the flat is still owned by B. That means the property haven't been transferred in the name of it till now. But apart from that, everything has happened. Okay. So in such a case, B is not going to consider as owner of that particular flat. A is going to die. Substance means what? Only the sale deed is not executed yet, but apart from that, all the other activities has been undertaken. Money has been transferred. A has taken the possession. Okay, he has started living that. So all the characteristic, all the features of what buying a flat has been occurred. Just the finance, just the legal aspect is remaining. That what B is the owner. So even though ownership is showing by B, but A has done all the relevant activities with respect to buying of that particular property, then in such a case we are going to consider A as the owner. Okay. In the same way, company we can apply same principle to A as well. A about the company of B, he has given to what $100,000, like we can say for 80%. But in B's financial statement, or we can say on legal aspect, nothing is showing that what like for example 80% is owned by A. But what A is doing, A has taken all the control, all the decision making with respect to B is normally undertaken by whom? By A, with respect to financial and operating decision making. Only legal title is remaining. Okay, now B is going to get controlled by A. Then in such a case, we are going to prepare for what? Consolidated financial statement. Only legal aspect is remaining. And this control and ownership we know. Okay. Till now, is it clear?
Yes,
Okay, fine. Now, what we're going to do, we're going to prepare CFS. One small question we're going to solve. See, basic steps what? 100% of P and 100% of S. 100% of parent plus 100% of subsidiaries, assets and liabilities, and ignoring the investment in subsidiary. What do they mean ignoring the investment subsidiary? See, for example, A had bought 80% in B. Okay, so A in A's individual financial statement, in A's individual financial statement, he must be showing investment in B. Like for example, this 80% he has bought for $1 million. So in individual financial statement, he must be showing $1 million invested in B. So when you're going to prepare CFS, na, combined CFS, you're not going to record this $1 million. Okay. And why we are going to not going to record that? I'll clear it now in 5 minutes. Ignoring the investment in subsidiary. 100% parent share capital and share premium only. Okay. So we are going to record the share capital parent company only. Why? Because we are preparing this consolidated financial statement in the books of A. Why A? Because A is the owner. A has bought equity in B. So we're preparing this financial statement in the books of A. So we are going to record the capital of A entity only. We are not going to record the B. Okay. Retained earning is going to be considered as balancing figure. Okay. Okay, we're going to solve this. Just a second. See. Consolidated statement. Peter acquired 100% of the equity share capital of Stephen on 31st December 2004 for $1 million. Okay. Now what has happened? He has acquired 100%. We just require 51% in order to hold a parent subsidiary relationship. Okay. But he has bought maximum 100%. So Peter become what? Holding company or parent company, and Stephen become what? Stephen becomes your subsidiary company. The financial statement of the two companies as on that date is as follows. He has bought on 31st December 2004. Just focus on data. See, in Peter finance, this is individual balance sheet. Peter's individual financial statement, investment in Stephen company. See, $1 million. This is tally. Okay. Other asset we have 15%. Stephen is having other assets of 1200. Equity share capital of Peter, this is 1000. Equity share capital of Stephen is 250. Return earning here 1100, 750. Liabilities and that. Prepare consolidated statement of financial position for the Peter Group as on 31st December 2004. Now what has happened now? See, this is my financial year. It starts on 1st January 2004 and it ends on 31st of December 2004. On last day itself, I have bought the entity. ठीक है, and as on that date itself I'm going to prepare my CFS. ठीक है, just read the question once. Okay, now we're going to solve this. Just a second. Huh? Okay, can you see my Excel here?
Yeah, it is well.
Okay, sure. See, we are going to prepare CFS. So what we are going to do? We are going to combine what first line is saying. 100% of parent plus 100% of subsidiary assets and liabilities. Okay. So ignoring the investment in subsidiary. And in Peter's financial opinion, asset side, we have only two things: investment, and we have to ignore that. And secondly, we have other assets. So we are going to combine the other asset only. 1500 plus 1200. That comes to how much? 2700. ये हो गया. Equity share capital. Equity share capital we're going to record of parent company only. Okay. So parent company financial statement is what? It is showing 1000. Okay. Retain earning. Retain earning we are going to record only 1100. Why 1100? So I'll tell you. I'll explain you the reason. Okay, first I'm going to write it and I'll tell you the reason. Retain earning parent company 1100. Liabilities. Liabilities what? 400 plus 200. ठीक है, तो ये कितना हो जाता है 600. ये हो गया 2700 getting added. ठीक है. See, why I have recorded the live retain earning of only 1100. So you must be thinking, okay, since I have bought Steven, so I should consolidate this as well, na? Okay. See, in case of consolidation, na, what normally happens? If I bought a particular entity, so after buying, whatever the amount of money which is going to be earned by subsidiary company, I'm going to have share in that. Okay. I have bought on 31st December. I have bought this entity on 31st December. Okay. After this 31st December 2004, whatever the amount of money is going to be earned by Stephen, I'm going to have share in that. But till now, the amount of money which has been earned by Stephen company, I'm not going to have any share in that. Why? Because I've already paid money for that, $1 million. Okay. So I'm not going to have share in this. What is going to be the total for retained earning? See, my retained earning, if I have bought this entity and after buying the entity, he has earned some particular profit, I'm going to take that profit in, I'm going to add in my retained earning. Okay. So this is the reason I'm not going to add this retained earning in my books of accounts. Okay. And why I'm not recording this investment? See, I have bought. See, I cannot invest in myself and record as an investment. Like for example, if you have 500 rupees in one pocket, you remove 500 rupees from left pocket and you kept in right pocket. That doesn't mean that you have won 500. In the same way, I'm preparing CFS now. So this is investment. So I cannot show investment in my same entity because now Steven is my entity. Na? So when I'm preparing CFS now, I cannot include that amount of investment in my CFS because that is my own investment. Na? I have not done investment in other entities. I can record this in my individual balance sheet, but I cannot record this in CFS because you're going to consider as what I'm making investment in my own entity, and that is not considered as an investment. So I'm not going to record this as, and for that 1,000 investment, why I'm paying this $1 million? I'm paying for this 250. Okay, so I'm not going to record this. At the same time, I'm not going to record this. So this is the logic behind that. Did you understood?
Yes, yes.
Okay, fine. So this was your entire demo accordingly. Do you have any doubt? Hello.
Hi, Amrish.
Uh-huh.
I just
Yes, sir.
wanted to know how this is useful in anywhere in any corporate or
See, you're going to become a global chartered accountant. See,
yeah,
like for example, see, since I'm a CA, okay, I'm a
okay,
ACCA, I done my CA. If I take my chartered accountant degree and go to like European countries, they not consider this Indian CA as a valid recognition. What they say, okay, if you want to job in our entity, either do CA of our Australia. If I'm taking job in Australian entity, going to Australia, or what they say,
okay,
complete the ACCA. And ACCA is a global chartered accountancy qualification. So even though
okay,
you complete from any part of the world, it is going to applicable everywhere across the globe. Okay.
okay,
Now you're telling that key why how this is going to get benefit to you in corporate. See, now every corporate have their offices across world. Okay, they are going to expanding his operation cross. They are entering into cross border transactions. So obviously they require people who have international accounting knowledge.
okay,
Okay, since I am a CA, okay, I have my Indian accounting knowledge for Indian income tax and all. Okay, since I have to require to do my ACCA as well, because in order I have to teach student. Secondly, when I do audit my other corporate financial entities, they have cross-border transaction. And in order to deal with that, in order to do accounting for those things, I need to have IFRS, ACCA. Okay?
yes,
And each and every entity, almost I can say like almost 18 to 19 entities out of 20 have cross-border transaction. And you require that financial international accounting knowledge for that. Okay. Anything else? Hello? Anupama, am I audible?
no,
Okay.
that's fine. Yeah, yeah,
Okay.
good.
Okay. Okay. Did you understood the demo? Anything? You didn't write it or you didn't understood? Clear everything?
No, I did understood. Yes, yes. Okay.
Okay. Okay. चलो ठीक है. I'll take leave now. ठीक है?
Good.
Okay. Just
Yes.
take the admission. I'll meet you in class. ठीक है? No issue.
Okay,
Okay.
can I get the course details and admission details as well?
Yes, yes. Rohit will help you with that. Don't worry.
Okay,
Okay.
okay, fine.
Okay.
Yeah,
चलो. Thank you. Have a nice day.
thank you.